Hi, my name is Saidatul. So today I will be explaining about the types of merger and acquisitions and also why the M&A took place between Sunrise BERHAD and also UEM Lands Holdings BERHAD. So to begin with, it's a type of M&A. The business relationships between Sunrise BERHAD and also UEM Lands Holdings BERHAD can be classified as a merger by acquisitions, specifically a merger rather than a consolidation. Following the merger, both companies combined to form a new entity known as UEM Sunrise BERHAD. This merger is considered as a horizontal merger because both companies operate in the same industry, which is property development. They were involved in similar activities such as residential, commercial, and also township developments. By merging at the same level of the value chains, the company was able to reduce competitions and also increase its market share in Malaysia property sector. Although both companies were in the same industry, they had a different strength. UEM Land specialized in a large-scale township developments and also had a strong financial backing from a Khazanah Nasional. Meanwhile, Sunrise BERHAD was known for a high-end residential project in prime locations such as Mont Kiara. This complementary strength allowed the merged company to benefit from a wider range of expertise. So to be concluded, the merger aimed to create a more stronger and also more competitive property developer with a diverse portfolio. Through this M&A, UEM Sunrise is able to serve a different market segments, increase its bargaining power, and also support long-term growth in sustainability in Malaysia's real estate industry.
Hi, I'm Alisha Humaira and I will be explaining about the main reasons for the M&A. In the year of 2010, UEM Land Holdings BERHAD decided to step into a new chapter to reach their company evolution. Therefore, UEM Land decided to acquire Sunrise BERHAD in 2010. So, what is the reasons for UEM Land to acquire the entire equity interest in Sunrise BERHAD? Firstly, Sunrise BERHAD has a specialization in high-rise residential. After the acquisition, UEM Land can build a solid foundation in high-end locations like Klang Valley. It is not only increase their revenue, but also grow their visibility and brand value. The second reason is Sunrise BERHAD has expertise in integrated commercial development. After the acquisition, Sunrise BERHAD has diversified UEM Land product portfolio and strengthened its brand to prime area of central Kuala Lumpur, Mont Kiara, and also Vancouver, Canada. Therefore, UEM Land will be in well position to accelerate its business expansion globally.
Hi, this is Nur Adlina Zulkifli. I will continue the final reason why UEM Land decided to acquire Sunrise BERHAD is because Sunrise strong and sustainable financial performance. Basically, Sunrise has been performing really well financially over the years, which made the whole acquisition less risky for UEM Land. Since Sunrise earned their solid earnings, UEM Land could feel more confident that the project they were planning would be carried out successfully. And they expand their market not just only in Malaysia, but also in other markets too. This means they could take on new growth opportunities without worrying too much about financial instability in the future. However, this merger allowed UEM Land to improve their long-term financial performance. For example, they expand their portfolio of projects in areas like Nusa Jaya and Klang Valley. They were able to increase their revenue potential to make their brand stronger. So in simple terms, this acquisition was not about buying another company. It was about making UEM Land financially stronger and more competitive in the property market. So to conclude, the merger has placed UEM Landholdings Berhad in a strong position to expand via both locally and internationally. The existing of Sunrise Berhad system, processes, and human capital, UEM Land was able to strengthen its overall operations and management capabilities. Overall, this acquisition has improved UEM Land's financial stability, enhanced its operational efficiency, and created more opportunities for long-term growth. Therefore, this merger can be seen as a strategic move that supports UEM Land's future development and competitiveness in the property industry.
Hi, Assalamualaikum. My name is Nurali Shafika. I'll be explaining about liquidity ratio. Based on the current ratio chart, the acquisition which happened in 2007 until 2010, it showed that UEM Land is better than Sunrise Berhad. UEM Land show a trend of increasing liquidity with current ratio rising from 1.33 times in 2007, 2.14 times in 2008, 1.94 times in 2009 to a peak of 6.86 times in 2010. This ratio indicates that UEM Land was holding a massive amount of short-term asset, mostly cash and land, relative to its debt to prioritize extreme financial safety. In contrast, Sunrise Berhad maintained a much tighter liquidity profile, with its ratio fluctuating between 1.65 times in 2007, 1.19 times in 2008, 0.80 times in 2009, and 1.57 times in 2010, where they rely heavily on its current asset to use it to fund operations. After the acquisition, which happened in 2011 until 2013, UEM Sunrise established a more balanced and efficient liquidity position. The current ratio was recorded at 4.29 times in 2011, then moderate to 2.67 times in 2012, before rising again to 3.44 times in 2013. The acquisition had a positive impact on the company's financial health, where the post-merger ratio indicates that the company successfully optimized its capital, maintaining a very strong defense to meet short-term obligations while putting its asset to more productive use. Next is quick ratio. Based on the quick ratio diagram before the acquisition, it showed that UEM Land is better than Sunrise Berhad, which was recorded in quick ratio of 1.16 times, 2.02 times, 1.82 times, and a high of 6.65 times in the year of 2007, 2008, 2009, and 2010. UEM Land maintained a highly liquid position after exclude their inventory and its prepared expenses. This indicates that UEM Land was holding significant liquid assets that were not being aggressively positioned into new projects. Meanwhile, Sunrise Berhad maintained a much leaner liquidity position, which was recorded in quick ratio of 1.43 times, 0.99 times, 0.59 times, and 1.28 times in 2007, 2008, 2009, and 2010. The ratio suggests that Sunrise Berhad had fewer liquid assets available to cover their short-term debt, where they may face financial risk in their company. After the acquisition, the quick ratio of UEM Sunrise Berhad stabilized at healthy level, recorded at 4.10 times in 2011, 2.57 times in 2012, and 3.3 times in 2013. This indicates that the merger had a positive impact, as UEM Sunrise Berhad had a strong cash position with active business operation, where it resulted in a more balanced and secure liquidity level. Lastly, in liquidity ratio is cash ratio. Based on the cash ratio diagram before the acquisition, UEM Land has a better cash ratio compared to Sunrise Berhad. UEM Land maintained a liquid cash position, which was recorded in cash ratio of 0.17 times, 0.04 times, 0.20 times, and a peak of 1.69 times in the year of 2007, 2008, 2009, and 2010. This means that UEM has cash available to pay immediate debts, and also indicates that UEM Land was holding a excessive amount of cash relative to its short-term liabilities to prioritize financial safety. Meanwhile, Sunrise BERHAD fluctuate in their cash management strategy, which was recorded in cash ratio of 0.28 times, 0.14 times, 0.08 times, and 0.38 times in 2007, 2008, 2009, and 2010. These figures reflected that Sunrise BERHAD keep minimal idle cash on hand in their business model. After the acquisition, the cash ratio of UEM Sunrise BERHAD became more balanced and stable, recorded at 0.87 times in 2011, 0.69 times in 2012, and 1 times in 2013. This indicates that the merger had a positive impact as the company successfully optimized its cash reserve and avoid the inefficiency of excessive cash hoarding, which provide a much stronger liquidity for the company. Next, I will be explaining about profitability ratio. Based on net profit margin diagram before the acquisition, UEM Land have better profit margin compared to Sunrise BERHAD, as UEM Land show a strong upward trend in profitability, which was recorded in net profit margin of 13.46%, 14.67%, 28.67%, and a higher profit margin of 41.66% in the year of 2007, 2008, 2009, and 2010. This growth in profit margin reflected UEM Land's success in high margin sales where its profit grows over a year. Meanwhile, Sunrise BERHAD maintained a relatively stable and healthy profitability position, recorded in net profit margin of 19.27%, 23.32%, 19.45%, and 22.51% in the year of 2007, 2008, 2009, and 2010. This figure reflected the consistent performance in gaining its profit. After the acquisition, the net profit margin of UEM Sunrise BERHAD remains strong and shows steady improvement, which recorded at 17.79% in 2011, 23.09% in 2012, and 23.88% in 2013. This indicates that the merger has a positive impact. The company successfully integrated the high margin capabilities of both entities to maintain a superior profitability level. Next is return on asset. Based on return on asset diagram, before the acquisition, UEM Land maintained a variable level of asset efficiency, which was recorded in return on asset percentage of 9.89%, 2.45%, 3.27%, and 4.93% in the year of 2007, 2008, 2009, and 2010. While the company started with high efficiency, the drop suggests that its massive land, banks, and assets were not consistently generating high returns. Meanwhile, it shows that Sunrise BERHAD has a better return on their asset compared to UEM Land. Sunrise BERHAD demonstrated much higher and more consistent asset utilization, which was recorded in higher return on asset percentage of 8.89%, 9.73%, 8.55%, and 6.73% in 2007, 2008, 2009, and 2010. This indicates that Sunrise was highly effective at converting its asset into actual profit. After the acquisition, the return on asset of UEM Sunrise BERHAD show a steady and healthy upward trend, recorded at 3.89% in 2011, 4.93% in 2012, and 5.90% in 2013. This indicates that the merger has a positive impact as UEM Sunrise BERHAD improved the productivity of its asset by applying more efficient operational and development strategies to gain return on asset.
Next, for the return on equity, UEM Land recorded a very high ROE of 23.72% in 2007, indicating strong profitability at that time. However, ROE dropped sharply to 4.41% in 2008 and only recovered slightly in 2009 and 2010.
This decline may be linked to weaker market conditions during the global financial crisis, showing that UEM land became less effective in generating returns for shareholders before the merger. In contrast, Sunrise BERHAD showed stronger and more stable ROE performance. ROE increased from 17.61% in 2007 to 21.6% in 2008. And although it declined in the following years, it remained higher than UEM land. This suggests that Sunrise BERHAD was more stronger and better at utilizing shareholders' equity before the merger. After the merger, UEM Sunrise recorded a relatively low ROE in 2011. However, ROE improved steadily from 2012 to 2013, indicating that the merged company gradually stabilized and began to benefit from the merger over time. Overall, the ROE analysis shows that Sunrise BERHAD was stronger before the merger, while UEM Sunrise improved gradually after the merger. Based on the account receivable turnover diagram, UEM land recorded a low and fluctuating trend from 2007 to 2010, ranging from 2.81 times to as low as 1.03 times. This indicates lower collection of receivables and weaker credit management of efficiency over the years, possibly due to slower property sales during weaker market conditions. In contrast, Sunrise BERHAD showed a much stronger account receivable turnover compared to UEM land. Although the ratio declined from 6.23 times in 2007 to 3.56 times in 2010, it remained relatively high, suggesting more efficient receivable collection despite some weakening over time. After the merger, UEM Sunrise recorded moderate account receivable turnover between 1.68 times and 1.34 times from 2011 to 2013. This suggests that receivable collection became more controlled but not highly aggressive, reflecting a more cautious credit policy following the merger. The inventory turnover ratio for UEM land dropped sharply from a very high level of 16.1 times in 2007 to much lower levels between 2008 and 2010. This shows that inventory was sold more slowly over the years, which may be due to weaker market conditions and slower property sales. For Sunrise BERHAD, the inventory turnover ratio was high in 2007 and 2008 at 21.79 times and 16.13 times. Although the ratio declined in later years, it was still higher than UEM land, showing that Sunrise BERHAD was better at managing inventory and selling properties faster. After the merger, UEM Sunrise showed an improvement in inventory turnover from 2011 to 2013. This indicates that inventory moved faster after the merger, suggesting better project management and improved sales performance. Before the merger, UEM land total asset turnover dropped sharply from 0.73 times in 2007 to 0.12 times in 2009 and 2010. This shows that UEM land was less effective in using its assets to generate revenue. Overall, UEM land's performance shows declining operational efficiency before the merger. Sunrise BERHAD, on the other hand, had higher total asset turnover ratios than UEM land at 0.46, 0.42, and 0.44 and 0.3 from 2007 to 2010. Even though there was a slight downward trend, Sunrise used its assets more effectively to generate revenue. After the merger, the total asset turnover moderately increased over the next 3 years, showing better efficiency in using the combined assets. This suggests that the merger helped stabilize operations and improve overall asset utilization, making the company more efficient in managing resources.
Next, I will be explaining in the part of debt ratio, which is debt equity ratio. This diagram tells about before and after acquisition of UEM land and Sunrise BERHAD. Firstly, before the acquisition of UEM land, it shows a better than Sunrise BERHAD. It slightly increased from 2007 to 2008 and it remained stable in 2009, showing a constant capital structure management. However, in 2010, the ratio falls to 0.13 times, which UEM Land reduced its debt level and relied more on equity. This shows that their financial stable a push before the merger. In contrast, Sunrise BERHAD experienced fluctuations before the acquisition. The ratio increased from 2007 to 2008, indicating higher debt usage. Then it decreased in 2010, showing some improvement before increasing again in 2010, which reflects instability and higher dependence on debt financing. After the acquisition, debt equity ratio of UEM Sunrise BERHAD, it remained relatively stable, fluctuating within a narrow range between 0.22 and 0.30 times. The small increase and decrease after the merger suggest normal adjustment in financing. Overall, the stable trend indicates improved financial control in healthier capital structure after the acquisitions.
For the time interest and ratio, it shows that Sunrise BERHAD is better than UEM Land. In this ratio, UEM Land has recorded an increasing trend. Before the acquisition, UEM Land shows a consistent improvement in its ability to meet the interest obligations. This can be proven within 2007 and 2010, which is from 7.09 times to 21.65 times. Meanwhile, for Sunrise BERHAD, this ratio has recorded a fluctuating trend. Sunrise BERHAD had an ability to cover the interest obligations, but the fluctuation shows that their performance was less stable due to higher reliance on debt. This can be proven in year 2007, 2009 and 2010, which is it increasing from 20.56 times to 48.34 times in year 2010, and it drops to 32.18 times. After acquisition, this ratio shows a consistent improvement, which is it gives a positive impact to the company, which increasing between 7.08 times in year 2011 to 20.01 in year 2013. This indicates that the company become more efficient in managing their interest and earn enough operating earnings, which led to a financial stability.
Next, I will begin with price to earning PE ratio. Before the acquisition, UEM Land recorded extremely high and volatile PE trends, with ratio of 5.88 times in 2007, rising sharply to 18.67 times in 2008, then declining to 31.20 times in 2009 and 24.3 times in 2010. This extreme fluctuation indicates unstable earnings and possible overvaluation. In comparison, Sunrise BERHAD show a more stable and lower PE ratio, recorded at 14.77 times in 2007, 5.69 times in 2008, 5.56 times in 2009, and 5.89 times in 2010, reflecting more consistent earnings and a more reasonably valued company. After the acquisition, UEM Sunrise BERHAD recorded a more stable PE ratio, ranging from 14.14 times in 2011, decreasing to 20.80 times in 2012, and slightly increased to 24 times in 2013, indicating improved earning performance and increased investor confidence. After that, I will move on to the price to book PB ratio. Before the acquisition, UEM Land recorded relatively high and fluctuating PB ratio of 1.93 times in 2007, 4.70 times in 2008, 2.48 times in 2009, and 1.98 times in 2010, suggesting that the company was valued significantly above its book value and carried higher investment risks. In contrast, Sunrise BERHAD demonstrated declining and more stable PB trends, with ratio decreasing from 2.70 times in 2007 to 1 times in 2008 and 0.0 times in 2009, and 0.8 times in 2010, indicating stronger balance sheet management and better asset valuation. After the acquisition, UEM Sunrise Berhad maintained a relatively stable PB ratio, recorded at 2.51 times in 2011, 1.69 times in 2012, and 2.35 times in 2013, reflecting improved asset valuation and a stronger financial structure following the merger. Lastly, I will discuss the dividend yield. Before the acquisition, UEM Land recorded a very low dividend returns with a dividend yield of only 0.48% in 2007 and no consistent dividend payment afterwards, indicating a weak shareholder returns. Meanwhile, Sunrise Berhad consistently provided higher dividend yields, recorded at 2.08% in 2007, 4.14% in 2008, 1.69% in 2009, and 2.69% in 2010, demonstrating stronger profitability and shareholder-oriented dividend policy. After the acquisition, UEM Sunrise Berhad maintained a stable dividend yields, recorded at 1.44% in 2012 and 1.28% in 2013, confirming the company's ability to sustain dividend payment and achieve improved financial stability after the merger.